Hey traders, welcome to Charts and Coffee. Good to see everybody. This is the aftermath of non-farm payroll. Reactions were initially higher as as the S&P, which is what's on the screen right here, shot straight up. And then now we're sinking back down. We're still trading well below the previous session close. So this is a heavy place to be for price action. I'll show you all some interesting volume levels too a little bit later on. As far as what I would expect on the bell, normally there's an echo of what happened at 8:30 Eastern, at 9:30 Eastern, because remember, there's a whole group of traders, stock traders, stock options traders, that were not able to participate in that 8:30 event because, well, that market is closed. And oftentimes you'll see a little bit of an echo when that market opens and those traders can finally react to the data. Now, here's where the data lands. Whether equities go higher or lower today probably have less to do with non-farm payroll and more to do with a combination of what non-farm payroll says about expectations on rate cuts. I'm going to show you this. This is something that I sent out to the Sector Secrets Mastery folks shortly after the event. And that is, I wait about 10 minutes to see what, if any, reaction there is in terms of rate cut expectations. Now, remember, the chatter about rate cuts being done is not only not based in reality, it's just really a misinterpretation of what the data has been showing, which is, yes, we're expecting a small period of time where the Federal Reserve will not cut rates. And then it looked like maybe July, we would see another rate cut. But that now is priced in fully into June. So current rates are 4.25 to 4.5%. And to drop down a quarter point would be 400 to 4.25. And then take a look, that's at 54%. You might say, Rog, that's not maybe all that compelling. But when you realize the overflow was in possibly 2 rate cuts by the time we get to June, traders are expecting, and this is not just speculating, this is actually a little bit of a sort of, think about it as a communication device where traders are projecting to the Federal Reserve, hey, we don't think you're done. This is when we think you're going to cut, and this is how much we think you're going to cut. And by the end of the year, we expect rates to be down at least 1 to 2, well, actually more like 2 to 3 more quarter point cuts. The jobs data is not going to reflect potentially what's been happening throughout, and this is March, so this reflects February's jobs data. So in April, we'll see March's jobs data. So we'll see how this continues to play out, but we'll hear from Powell at 12:30 p.m. Eastern, and that will likely be sort of the confirmation, perhaps, that those expectations for rate cuts are not misaligned. And ultimately, this non-farm payroll moved up expectations for the cuts. After 12:30, we'll see if they hold. I'm not saying this takes the equity markets, indices specifically, S&P, NASDAQ, Dow, out of the move lower that we've seen throughout March. I'm not saying we suddenly put in a bottom. It's probably a little too soon to talk about bottoms in terms of support, right? Where is that buying demand going to kick in? And we don't really have a lot of signs of that yet. The first sign, if you're wondering, okay, Rog, where is this thing going to start to level out, right? Forget rally, etc. Where is this thing going to start to level out? We don't even have sort of normal volatility movement yet. The S&P has been, for the most part, throughout late February and early March, continually exceeding sort of normal or 68% volatility. So until that normalizes, I won't look for any kind of bottom pattern. The second thing that I'll be looking for, and this is a little bit more opportunistic, and we'll be doing a lot more of this in the Sector Secrets Mastery. So just, generally speaking, it isn't all about day trading. In fact, that's not even my favorite or preferred style of trading. For those of you that may not have read the book on Jim Simons and Renaissance Tech, if you haven't, please do. One of the things that we can deduce from the data that's come out in the wake of that book, and even all the speculation about this very secretive but very successful hedge fund did for the bulk of its time, just absolutely kicking butt and taking names in terms of trading. And it was a trading fund. This wasn't a buy and hold fund. Their typical hold time was much more aligned with swing trading. And their typical hold time usually was about 2 to 10 days, which is what I prefer too. If anyone's been swing trading for any length of time, you realize there is a pretty good sweet spot for follow through on swings, meaning longer term, usually daily time frame for me, overnight positions. And right now, that's, it's been a little bit more difficult because of volatility. But let me show you something else, right? One of the things we always like to embrace as traders is not at least I hope not, right? We don't want to pigeonhole ourselves. There's lots of opportunity, and I'm trying to move over my chart so y'all can see this. Okay, so one of the things that we do once a month, and we've been doing this for 2.5 years, I believe now, coming up on 3 years. One of the things that we do is the first Tuesday of every month, we take a look at weekly charts, and we take a look at where those weekly trends are, because those weekly trends can be dramatically different than 1 hour trends, than daily trends, than trends that we're commonly looking at for swing trades. And one of the things that a lot of traders miss out on, which is why we have this session and have for years in the Sector Secrets Mastery, is that a lot of times when there's panic, that's actually a sale, right? What do I mean by a sale? Imagine Prime Day, imagine Black Friday for the stocks that you want to put in a longer term trading portfolio. So number one, what's longer term? Longer term is at least looking at that position and holding it for about 6 months and then possibly years. One of the, I'll just kind of harken back to the initial sessions that we did in the Sector Secrets Mastery, where we started building longer term positions. When we started these sessions back in 2022, we have a longer term position with shares in XLK from 122. Right now, we're at 220. Right. So sometimes giving that longer term some attention, taking advantage of moves when we're moving lower on those weeklies, because, a lot of folks saying, oh my gosh, here comes a recession, whatever negativity is out there. Remember, these great buys for a longer term hold often come when there's negativity, often come when everyone's freaking out. And there are certain types of moves in certain types of trends that I like to take advantage of. So we'll be doing a lot more of that in the mastery over the next couple of weeks, at least putting that, I like to call it a wish list, putting that wish list together and then waiting for the panic to give us those, dream prices. If someone would have told me that, NVIDIA sometime the middle of last year could be pulling back, in this case, I think there's more than a 20% pullback on NVIDIA. This is why we never encourage traders to do in the Sector Secrets Mastery. We never encourage traders to do what typical retail traders do, which is they buy new highs. Now imagine buying this thing up at 153 and realizing, oh, I could have bought this on sale at 40 points lower. And that's what hurts retail traders. Are chasing new highs because new highs get promoted on television. My gosh, don't listen to timing on television. They're telling you what has already happened, right? Not what is an opportunity right now. They're reporting what's happened. It's not a setup. However, now we're starting to see some really cool setups. So right about the time everyone's peak pessimistic and the R word like recession and everything else gets thrown around, if you haven't already built your wish list or you don't have a process for it, come check out what we're doing in the mastery, because that's absolutely something that I'm going to be doing with a lot of excitement as we go into what is probably one of the best sales we've seen in some time. All right. So that is, again, we always want to think about where the opportunity is. Being pessimistic, getting driven by fear and panic never allows us to make proper decisions. And it simply means we have to focus on where either right now the downtrends are, so we can short into the rip, or where there are a small number of uptrends, so we can take advantage of buy the dip. And if we can always keep a multi-time frame approach. Now, I don't mean multiple time frame confirmation. I'm not talking about the weekly confirming the daily or the daily confirming the weekly. None of that. What I mean is every time frame has a job. I have 4 time frames that I look at. 5 minute is for day trading, 1 hour and daily time frames are for swing trades. The 1 hour is a shorter term swing trade. The daily is a slightly longer term hold time, longer term time horizon swing trade. And the weekly is where I look for those position trades, things that I might want to hold for months, frankly, if not years. And those are the only 4 time frames I really need to concern myself with for the 3 styles of trading that I like: day trading, swing trading, and position trading. And if you don't have an approach like that, find the time frames that will allow you to do this, because sometimes the day trading isn't so great, or sometimes the swing trading opportunities are very few. And that means something is playing out somewhere, right? Money never stops. It doesn't stall. It doesn't go under the mattress. Markets don't go flat and sideways for very long. Find those opportunities. Stay optimistic. Even in a downtrend, find where those sales are. And then you find that, gosh, it makes so much sense that news is going to be talking about these scary things, because they want you to stay tuned, right? So you got to stand guard at the gate of your own mind. All right. That all being said, let's take a look at what we've got going on here on our questions. And by the way, yes, non-farm payroll was a slight miss. Misses tend to be a little bit more bullish. Doesn't mean the equity markets are rallying. This is not even a conversation about where the stock market's going next. It's really about where macroeconomic trends are pointing to the next round of at least quarter point rate cuts. All right. So Patrick asks, what are my expectations for the market reaction on non-farm payroll? I never make a guess at what the number is going to be. I never even guess at what the reaction is going to be. We just look at what has happened, and we look at all these different metrics. For example, are we trading within normal volatility? And then macroeconomically, what are expectations? And expectations are dovish, right? We have all sorts of animals. Are the equity markets bullish right now? Oh gosh, no. If I'm looking at S&P, NASDAQ, Dow. But is monetary policy still dovish? In other words, favoring lower rates? And that is a big yes. It still certainly is. All right. Next up is taking a peek at, let's see, any questions? Yeah, and let me talk about where we have been trading. Right? What we're going to be looking in the Sector Secrets Mastery in places that, frankly, you're probably not going to see most traders discussing. We've been looking at things like uptrends and defensives. Those are going to be corners of the market. Now, what's a defensive name? A defensive name is one that tends to benefit when there's weakness in the S&P, NASDAQ, Dow, when there's fear. XLRE, and I put a watch list together for this one yesterday for our members. XLRE is one place to look. Another defensive sector is XLU, although XLU has been taking it on the chin. There are a handful of uptrends still in this particular defensive sector. We've been taking advantage of things like XLP Staples. In fact, the last round, look at how resilient Staples is. This is the XLP. This is Procter & Gamble. This is Coke. The 4 winners we took off the table earlier this week were in Staples, XLP calls, Coke calls, right? And that's what's really interesting about looking at, there's weakness in one place, but that money's going to flow somewhere else. And you can see how resilient Staples have been. Definitely something I will continue to keep an eye on going forward. And then XLV. Now, this is not a commonly discussed defensive because it's not really in the same type of definition that I like for a defensive. Defensive stock should not necessarily be heavily weighted in the broader averages because they don't get to be outside, say, the outgoing tide of the S&P, NASDAQ, Dow. So what I want to keep in mind is that XLV, while commonly considered to be a defensive, it's weighted pretty heavily in the S&P. It's weighted pretty heavily in the Dow. So it has to work a little harder, but it has been a great place for taking advantage of long calls. And you can see here, as much as we're seeing weakness in the broader averages, the XLV is actually holding its own. And I say this, and look, part of the job is talking your book, right? Everyone out there, you need analysis and supposition like you need a hole in the head, right? Nobody needs more, hey, this could happen, but this could happen, and this looks interesting. No, Rob, tell me what you're in, because that speaks volumes about where you're looking for opportunity. We are still in the sector sequence mastery. That was an alert I sent out to members. Still long XLV, still long Johnson & Johnson. XLP is still on the radar, and a handful of names in the real estate and a handful of names, very small handful of names in utilities. And that's just not usually where most traders are going to be looking. They're going to be saying, hey, when is NVIDIA going to rally again? Or when is Apple or Amazon or Tesla going to rally again? And while that's an interesting question, that question might be best asked on a weekly time frame, right? More of a longer term play. Or if you're looking for swings, find the trends. And the trends on some of those magnificent sevens, the not so magnificents, are things like downtrends in Amazon, downtrends in Tesla, downtrends in the sector that they belong to, which is the consumer discretionary. So there is a lot of weakness out there. And this is where, for the first time, this is the first time in many months that I'm open to short the rip, right? We've been doing great with buy the dip. Long calls have been fantastic through February, March. However, now that the broader averages have rolled over, giving me at least 5 top tier candles, now I can start, as of this week, start to consider downtrends that are weighted within the sectors, that are weighted within these indices. And yeah, I can get bearish. I don't like to be bearish for very long. Bearish action is not something that's usually sustained. If you look at previous pullbacks, right? If you look at previous pullbacks, they're usually not going to be lasting all that long. All right, hang on. I have sound issues. All right. I can't tell from this end here. All right. Hang on one second. I know y'all are fine on YouTube and whatnot. All right, let's see here. Let me capture the room. Yeah. All right. So yeah, it's the other room. Okay, so let me keep answering some questions here. What's the name of the Jim Simons book? The man who, oh gosh, off the top of my head. If you just go to Amazon and look it up, yeah, who asked me about the Jim Simons book? Gregory, if you just go to Amazon and look up, I think it's the man who something. Someone might remember. Yeah, someone might remember. It's the Jim Simons book on Renaissance Tech. All right. So if we're taking a look at what's going on with equities moving lower, yes, for the first time in a really long time, I'm okay with long puts. However, let me mention this. The day is far from done, right? We might think usually on non-farm payroll Fridays, we've got the information we need and we can react. Not so this Friday. Take a look. We get through NFP and then we have FOMC members at 10:15, 10:45, 12:20. And then after that, we hear from the FOMC chair, Powell, at 12:30. Then we get one more FOMC member because, gosh, 3 were not enough, plus the chair. We get one more FOMC member, and then we get I believe this is going to be on crypto. The president's going to be speaking on at a crypto roundtable. This is, thank you, Best Bid, the man who solved I know it was the man who did something. The man who solved the market. Yes. How Jim Simons launched the quant revolution. Yes. Thank you, Best Bid. So that's really where we are right now. We still have a lot to come. Remember that Powell is going to be sort of putting a bow on whatever it is we're supposed to take away from non-farm payroll. So this is an unusual morning where that normally we get non-farm payroll. We've got our macro tack. This morning, we've got really in total, take a peek, 5 FOMC members. And the most important one is going to be speaking at 12:30. That's the schedule. As always, thanks for being here for Charts and Coffee. And I'll see you all on Sunday, 6 p.m. Eastern, for our weekly outlook and Q&A show. All right, gang, be good to each other. I'll talk with you soon.